Now joining us is our great friend from Atlas Technology to talk about their most recent quarter, Harry Tayjar. Hello, Harry. Welcome to the show.
Thank you for having me.
Well, Harry, first of all, let's give you a big pat on the back because you're obviously a hero right now. You guys are heroes in general. Last time we talked about some of the companies that were moving to the United States from China. We talked about the fact that you guys are taking the lead in the touchscreen business. But let's lead off today with 5 consecutive quarters of double-digit growth. How'd you do it?
Well, hard work, I'll tell you that. All of it was a result of 40 years of, again, relationships from our founders, and the result of moving over to the United States, along with a number of other China-based companies, including, as we said last time, China's number one largest employer, and that's Foxconn, who moved over to Wisconsin. And we simply just rode the coattails, moving over to Los Angeles, our new corporate headquarters. And since launching our new corporate headquarters, we've pleased to announce almost 4 new blue-chip companies, including Honeywell, including Keurig, the coffee maker, and a couple new ones, which I think the street will be very excited to hear shortly when we announce those.
Well, obviously, you guys are on a tear right now, to put it lightly. One thing that you indicated was you guys are rapidly capturing market share as a function of your innovation, your ability to create new products and make those products available to customers who want them, which obviously in this case is becoming somewhat of a who's who. Talk to us about that innovation.
We do things a little different. What we do is we don't go out there and ask our clients what they want to build. We go out there and help them create what we believe would be highest in demand. So take, for example, the Honeywell thermostat. That patent is something that we actually developed, and that's the touchscreen patent. We helped the Honeywell engineering team develop that product, and as a result of focus studies and studies that we did out in Taiwan, that became probably the number one highest in demand thermostat out there among thermostat products. And that's the result of engineering, creativity, innovation, and a lot of R&D.
Well, you mentioned something that's very important there. You talked about the thermostat, the programmable thermostat from Honeywell. I've used those before myself. One thing you did also mention was the IoT part of it. What role is Atlas playing in moving toward touchscreen and touchscreen technology where it becomes part of an IoT-type ecosystem?
It's interesting that you say that. That's the overall macro vision, and that is that we want to be in the center of the house. So we want to be the smart home. And the way we're going to do that is we're going to piggyback off of a big entity such as a Google or an Amazon or one of those large players. And I'm not throwing out those names lightly. We are, in fact, I'll say in talks with those large players in terms of how best to enter the home, and we believe the best way to enter the home is through the alarm system or through the thermostat system, and because there's so much confidence in, say, an ADT, which is why Samsung, for example, acquired it. It is the easiest and the fastest route, I believe, into the home, and we hope to believe that to be that key player and being where we are in terms of one of the fastest growing and the most confident companies out there. We have a lot of trust, and we have a lot of trust with the consumers as well as our investors.
Obviously, looking at that particular scenario and entering the home through the security system. On this next part, we have a couple of a minute or so left on this particular segment. Delve into the data side of that. Obviously, data is a big part of what we see now. We have our George Orwell moments here, but when you think about the product that you make, and you think about how it actually works, do you see Atlas as a player in using that data and obviously opt-in data and using that information to help your products be even better?
Well, data is key at the end of the day. Data is always the holy grail. I think the holy grail is going to be data as far as touchscreen technology grows. And if you picture touchscreen technology in terms of input, in terms of what the consumer inputs, it is the holy grail as far as everything that a particular brand wants to know about a household. Everything from where he spends his money, where the consumer travels during the summer, where he or she or what time he or she turns on and off the lights. So all that data goes right back to us when we can offer that to our clients where no one else can.
Outstanding. Outstanding. One of the things you also mentioned too is you expect to have a lot of new contracts with some blue chip companies that you'll be announcing going forward. We'll delve into that in the second half of the interview, so you'll have a chance to really get into it. But you've also looked at a lot of different initiatives that are designed to boost shareholder value, which obviously part of that's in growing the organic nature of the business itself. And too, when we come back after this break, can you address some of those things for us?
Absolutely. I just want to talk about one thing in particular, and that is we are not a fly-by-night company. We're here for the long term. We're here for the long-term shareholder. We're here to build long-term shareholder value. We're not here to run our stock and then exit like some of these other high-tech companies. If you look at our balance sheet, if you look at our growth, we're looking at 5 consecutive quarters, like you said, of double-digit growth and a clean balance sheet with zero debt and long-term growth prospects. No question about it. I'd love to get more detail about that.
We will. Perfect. We'll break right now. We'll be right back. This particular section was brought to you by our title sponsor, Tycon Partners. We'll be back right after the break. Welcome back to CEO Money. I'm Ed Baxter, sitting in for Michael Yorba. We're talking to Harry Tayjar of Atlas Technology. Harry, we left off a minute. You were talking about the fact that you guys saw yourself as a long-term play and you weren't, quote-unquote, a fly-by-night operation. Give us a little bit more color on that.
Well, I wanted to emphasize that, yes, we are a small company, but we're a small and rapidly growing company. We are focused on one thing and one thing only, and that is the enhancement of shareholder value. How do we plan on doing that? Well, we already have the fundamentals, and that is that we have a strong balance sheet. We have cash on the balance sheet. We have a strong management team. We have a growing customer base of blue chip clients, not small, mom and pop companies, but large blue chip clients that are multinationals, really, multi-billion-dollar companies with a focus mostly in the United States. Hence why we moved over here to the United States. We have a P&L statement that is growing almost hockey stick growth, I'd say. We have a cash flow statement that is now sitting on 4 quarters of consecutive positive cash flow. So by all means, we're definitely a unique and rapidly growing company that is ideal for the investor that is looking for a rapidly growing stock that's significantly undervalued.
One of the value propositions you guys talk about on a regular basis with the company is the fact that your management team has a tremendous relationship with clients of Foxconn. You indicate that that'll be an area of pursuit for you. Can you kind of speak to how you guys expect to gain some more clients that were normally clients of Foxconn?
Say, a good example would be what Wynn Casino did with the Venetian. Anytime the Venetian went and launched a hotel, a casino, Wynn went right afterwards and copied and opened a hotel right next door. And they're not embarrassed to say that. What they essentially said was, look, the Venetian thrives on the conference business, and what happens in the conference business is they always have overspill, and the overspill ends up at the Wynn. And so at the end of the day, the Wynn always benefits, and it benefits in a significant way from the size of the Venetian. And the same thing applies to Atlas and to Foxconn. Because of Foxconn's size, there's no question that they're the 800-pound gorilla in the business, in the industry. It's just too large of an industry, too large of a entity. So they're always going to be overspill, and that overspill is where they're to capture it because we're the smallest and fastest growing, and also the most nimble. So we are flexible enough, especially with our balance sheet, to be able to provide, manufacture, engineer, and provide enough creativity to deliver to our clientele the type of services that they're accustomed to.
One thing you also mentioned is that the company is preparing for a global launch of branding and licensing as a strategy to continue to grow earnings. Kind of delve into that one for us. Give us some ideas of how you guys expect to expand the brand and also strategy for licensing with other participants in the industry.
It's interesting you say that. That's probably one of the most exciting parts of our story, and that is, at the end of the day, how does a company of our nature grow our earnings? Well, at the end of the day, it's licensing, and the way we do that, the way we plan on doing that, is by launching our own private label, and that is the Atlas brand. How do we do that? We plan on doing that with channel partners such as Amazon, partners such as some of the large big box retailers in the U.S. We plan on launching the Atlas brand, whether it be in the home via thermostats, for example. Interesting that I say that, or alarm systems, or anything that these days that you touch is almost 80% of it is touch screen, and that's how we plan on launching. And we plan on launching with our own brand name. We obviously already have the credibility of being able to provide and deliver the highest quality product out there. So once we provide and launch that global launch, I think you're going to see earnings, and you're going to see margins really go through the roof. And I have to point out that as we stand already, we're already at 34% gross margins, where the industry's average is almost 11%. So we're already beating the industry. So we can only stand to increase that only even greater.
And almost having a 20-point lead on the gross margin side with regard to the industry itself, would you argue that that's just a function of you guys' ability to be efficient?
It's a function of size, efficiency, synergies, and being able to move to the U.S. and being a public company, by the way, which is only a handful, if any. We have been able to decrease our cost of capital, whereas no one else has.
Obviously, that's a big issue now, decreasing the cost of capital for an emerging company. Is that something that helps you guys go out and reduce the number of shares outstanding you had based on what you had prior?
Yeah, no, absolutely. Like we said last time, and obviously this is a company with credibility. We had almost 56 million shares outstanding, and we did say that we were going to focus on recapitalizing our company. So as we speak now, this quarter, I think it's safe to assume that this is the quarter that we're going to drop our shares outstanding to own probably about 30 million or less than 30 million shares outstanding, because we do believe there's way too many outstanding out there. So with the less shares outstanding and the higher net income, I think on the EPS basis, and especially given what our analysts are saying that our company should be valued at, I think you're going to see a much higher and I have to be safe, I have to be careful here, much higher stock price based on what the forecast is.
You also mentioned that you had some relationships with new channel partners with regard to distribution, and also looking toward having your own product area and branding yourself. Other than the retail side, do you expect to have more of an institutional presence too with the bigger manufacturers out there?
There's no question about it. Absolutely. We are looking to launch on a massive scale, and we are looking to launch with a partner. We are not looking to manufacture the product ourselves. We are looking to either manufacture with like you said, a channel partner, or just lend the brand name Atlas. We are trademarked, and we are looking to focus more on chasing the patents because our engineering and R&D is really top notch, and that's something that we really need to focus more on going forward, versus just purely being an OEM, which is something that is no longer basically it's lost with Wall Street a long time ago.
Perfect. Harry, once again, it's been great talking to you. It's been fabulous listening to the story and watching this company grow, and watching you guys manage the stock and manage the company itself in a way that obviously benefits all the shareholders. I want to thank you for joining us today, and thank you for being pointed enough to really give us the full story of how this company grows. So thank you for joining us today, Harry.
Neil, thank you. And I just want to add one thing, and I will leave with everybody else with one thing, and that's Mr. Sai here. I wanted to point out that in December we are having an open house in our corporate headquarters in Los Angeles, where we would like to invite all of our analysts, shareholders, potential institutional investors to come out here, take a visit, look at our new products that we're going to be launching in 2018 to the industry, and go through our business model and see how that affects the bottom line.
Perfect. Thank you very much, Harry.